Alan Gayle, we're now in the back half of earnings season. What's your biggest takeaway so far?
I'd say so far the earnings season is going pretty well. Companies have managed to adjust expectations, and they're stepping over a low bar. One of the things that I'd like to emphasize is that we knew that the energy sector was going to get hit, and we knew they were going to get hit hard. If you look outside the energy sector, in fact, earnings are expected to be up, not down for the second quarter versus a year ago. So that says that Wall Street and corporate America are continuing to execute, even though the economy is growing at a subpar pace.
What about slowing China? This is something we've heard from a lot of companies during earnings season so far.
China is clearly is basically trying to rebuild the airplane while it's in flight. They're trying to reorient it from being an export-led economy to a consumption-led economy. And what happens is the destructive end of that tends to come first. That's putting downward pressure on commodity prices. But I think that to a great extent, a lot of that is to the benefit of the U.S. consumer.
And speaking of the downward pressure on commodity prices, is this a good time to step in and buy some of the miners, buy some of the oils? I know the consumers are enjoying these lower prices, but is it good for the economy?
Well, from my perspective, managing the allocation strategies, I'm probably at the minimum weight to commodities in my allocation strategies. And the reason for that is even though the valuations are good, the demand has not stabilized and has not started to move up. So I think it's too early to jump into the commodities space.
Now, earnings season started off very well. You had some beats by the big banks. Will financials lead in the second half because they lagged in the first?
We believe that the financials still have decent upside to them. So I would say yes, we see loan demand is starting to pick up, loan quality is solid, and we're likely to see an increase in interest rates. All those factors are going to argue for a further appreciation in financials.
And then speaking of an increase in interest rates, can you comment on high yield? It's been selling off lately. A lot of worries about liquidity in high yield funds. Do you like it here?
We still think that the high yield space offers value. Clearly, we've seen a compression in credit quality spreads. And so what typically happens during this phase of the cycle is that you're going to see more volatility in this space. I would say that this is more of a buying opportunity for the high yield space than a signal to get out.
All right. Thanks a lot, Alan.
Thanks very much.
Thank you for watching The Street.